Okay, folks, welcome to a special edition, I guess you call it, of Swing Trading Today. I'll go to the news first, and we'll wait for people to join in. It's going to take a few minutes for people to get the alert. And if you want to get added to our email list and get notified of when I go live, anytime, there's a link down below. If you're watching this on the replay, it's a 15-minute opt-in email alert service. You'll not be spammed. Just enter your email address. We hate spam too. Tomorrow morning, 5 a.m. Eastern Standard Time, I'm going to come back online again. You can always catch the replay, but 5 a.m. Eastern Standard Time, we're going to watch the futures tomorrow morning. So we're going to go over the futures of action this evening. Then tomorrow morning, yet again, we're going to wake up bright and early, and we will review the futures action. And while I wait for people to join in, let me just go on to StockTwits. What else we want to talk about? AMZN, definitely. NASDAQ. What else? There you go. SPY. Okay. All right. Okay, so thanks for those likes, folks. If you could hit that like button, I really appreciate it. Thank you very much. Okay, so a short while ago, Apple announced that they're cutting a Q1 guidance due to specifically the coronavirus. Now, I hate to be a person that says, I told you so, but frankly, I've been coming on air here for about 2 weeks now, and I've been saying, I can't believe the apathy, the complete and utter complacency on the part of not just the amateur investor, you'd expect that from the amateur investor, but on the part of the financial news media. They never ever fail to disappoint their viewers. So we've been watching with bated breath the markets rally higher in the eyes of a China, which is the growth engine of the world. We've watched it shut down. And they tried to play games with us early last week by saying that Foxconn was back up and running, when in reality it was only 10% of their workforce. They're the Taiwanese company that produces much of the components for Apple. So this should be no shock to anyone that they are announcing this. Yet if you take a look at their stock price, this coronavirus has been going on for weeks now. Yet we're all-time highs. Not anymore. RSI weekly chart as of Valentine's Day, we have 83.72 on RSI. Not one bit of institutional selling here. And it just goes to show you just how incompetent much of the so-called smart money really is. We have been shorting these companies, the triple Qs. We have been shorting it. We added more last week. And believe me, I have no Harvard degree. Far from it. daily chart. I'd just like to walk through and see how we closed out. Was there an indication in the marketplace that there were concerns with regard to Apple? And taking a look at the daily chart, not really on price action, looks pretty good, holding in there. A little bit of stalling, but net Stokes is still rising. But one thing stands out, and I drew this several days ago, and I'll just extrapolate the line out. I warned you were seeing lower highs on RSI. You had a negative divergence. But in the infinite wisdom of the financial news titans, they broke out RSI anyway, not on price, but on RSI they broke it out. You have an indicator leading price performance. That's generally a bullish sign. You may not want to buy the shares on that breakout, especially when you have weekly RSI well above 80. Only a couple of weeks ago, Apple had RSI well above 90 on a weekly basis. Friday, you saw a doji star formation, a sign of indecision. Frankly, in looking at this chart, had we not gotten the cut in guidance, I wouldn't tell you to go shorting Apple as an individual stock on Monday morning, or Tuesday morning, I should say. I would say, I don't know. I don't know what's going to happen here. The probability is that we would continue higher because we had a doji star formation. That's a sign of indecision. In all probability, the path of least resistance would remain the same, and we would break out to the upside, especially with a managed market. This is a managed market, and simply because Apple cut guidance does not mean that this market is going to fall apart tomorrow. I wish I could tell you I'm the smartest guy in the room for shorting this market. I can't be guaranteed that they're not going to come out tomorrow morning with a quarter point basis cut out of the Federal Reserve, or they come in, they provide liquidity overnight. I have no idea what dirty trick they're going to do to keep this market aloft, and that's exactly what they've been doing. So we'll leave off with a 30-minute chart here of Apple, and we'll go to the futures action. Because, again, if you took a look at the 30-minute chart on Friday afternoon, look at this. All your indicators are going in the right direction. It looks as though, absent this news out of Apple, we would have probably moved higher on Tuesday morning. Pretty bullish stuff. But again, it's all the momentum trade. And believe me, there will be naysayers out there. They will try to come in and defend Apple shares. So if you're long of Apple, you're worried right now, don't worry. They're not going to drop it like a rock. They're going to carry it a couple of rounds. They'll bid it back up. Watch for a lower high. And if you're looking to have a definitive stop point, if they gap it down tomorrow, you get your reversal to move up higher in the next several days, you got to raise your stops. Raise those stops. Hey, Pat. Good to have you, buddy. How's your grandson doing and your daughter? Hopefully well? Pat, one of our members, just had a new grandson. Congratulations. The trip cues, of which we are short and have been leaning into the short side on. I'm just touching base here. I'm letting the futures markets settle down. Good for you, Pat. Let's let the futures markets settle down. Let them digest the news. On the trip cues weekly basis, we have RSI at 81.03. I want you to think about something. If you pick up Technical Analysis for Dummies, they're going to tell you to short a stock, an individual stock. Highly speculative, as are all stocks, but when you put them together in a bundle like the triple Qs, your risk is supposed to go down, right? However, you wouldn't expect to see RSI so far beyond that 70 threshold on the triple Qs, but we're there. Again, we've been there before, back here in 18. What happened? Didn't end well. So here we are yet again. We closed out the week last week, still looking pretty bearish. Your Stokes are rising. RSI It didn't put in a new high last week, but it was about the same as the prior week. I wouldn't say it's a negative divergence. But the volume, folks, and this is what I've been talking about. This is what I've been talking about with members for the past several weeks. There's no volume. Volume was very light last week. So they're breaking these indexes out to new all-time highs. Here's the S&P 500, the spiders, on no volume. Price to sales, the most expensive market in history, right here, right now. You're looking at it. And you have a negative divergence here on RSI, S&P 500. Let's go to the futures action. If you're just joining in, if I could ask you to hit that like button, I'd really appreciate it. Tomorrow morning, 5 a.m. Eastern Standard Time, we're going to go live. I know that may be early for some of you, but you can catch it on the replay. So just subscribe to my channel, and you'll be able to get it on your YouTube channel when you log on. It'll be a suggested video, hopefully. So let's go to the pre-market activity, and we'll do a deep dive. We'll begin first. See, they bounced it back a little bit here. This is the Russell 2000. A lot of technical damage. This is a 30-minute chart. Let's go to a 4-hour chart, get that higher level view. Now, we've been watching the TZA. It's been on our watch list to possibly get short of the Russell 2000. We have broken down so far this evening below not one support level, but two. But it's still early. They're going to try to rally these markets back. They do not want this party to end. Take a look at your RSI, rolling over, lower highs. A validation of price, lower highs. But we don't have lower lows yet. We will be watching. Again, this is only a 4-hour chart, so somewhat volatile, twice as volatile as a daily chart. All right, so they're going to defend, what's the low here? 1680. They're going to defend 1680 on the Russell. Let's go to the S&Ps, the E-minis. Now, what's funny is that before the futures market opened up, and even before I saw the news on Apple, I updated this chart, and I added this yellow line here. And we have gap down below. This is our early warning signal, our tripwire, because this now becomes our lower band of support, of which at current, on a 4-hour basis, they have gapped us down below. But again, folks, I don't want to be doom and gloomish here. I want to be open-minded, okay? We are in, and you're going to hear me say this over and over again, because there's going to be a lot of people tomorrow morning that if they gap the futures down, gap the market open, gap it down at the open, they're going to try to lean into the short side in this market, and guess what? You're probably going to get burned. They are going to try to rally this market back. They're not going to allow this market just to drop like a rock. They will pull out every trick in the book to spin this market up higher. So don't go chasing this market to the short side. Yes, I'm short. I said that earlier. But I will not be leaning into the short side until we get a counter trend rally, a lower high, and then a takeout of the prior low. I want to see a confirmation breakdown, long story short, of this market. So simply because we have an ugly futures market at current doesn't necessarily mean that it's time to go leaning into the short side, hand over fist. Remember, when you're shorting the market, you're betting against the establishment, the swamp, whatever you want to call them, the banks. You're betting against the big boys. Most hedge funds, I shouldn't say hedge funds, most fund managers cannot short the market. That's why they come on TV and they have slick back hair. They have really nice suits on. They have a line of crap that could really sell ice to an Eskimo, but they can't short stocks. That's why they have such a hard time beating the S&P 500. So there is a bias. There is a need to have this market to continue higher because why? Compensation dictates behavior. They get paid on the value of their portfolio. How high is it going? CEOs get compensated on meeting objectives of their stock price. Why do you think that they're buying back their own stock? Compensation dictates behavior. So shorting the market at current into weakness is a risky bet. It may look like a surefire bet right now, but it may not be. So give this market some room to digest the news. Believe me, the CEO rooms are going to be lit up this evening on Wall Street. They're going to come up with a line of crap to spin tomorrow morning on CNBC. Any reason whatsoever to keep this party going. The NASDAQ 100, the triple Qs, futures version, gap down at current. Here's your primary lower band of support. Broken. But we've been here before. What did they do when we broke support? Hell, only 3 weeks ago on the S&P 500, think about it. Here's a weekly chart, S&P 500. We broke the lower band of the rising uptrend channel on the S&P 500. Guess what? 2 weeks later, we're at all-time highs. Go figure. So if they could do it on a weekly chart and bid the market back up higher, they could certainly do it on a 4-hour basis. So again, please, we're going to watch the markets. We'll see if this gets really ugly overnight. I'm going to come back live tomorrow morning, 5 a.m. Eastern Standard Time. My phone is just going crazy right now. And we'll see how we're poised to open up tomorrow morning. Now take note here on the NASDAQ 100 on a 4-hour basis. We've been putting in higher highs, but what has RSI been doing? Failing to confirm a bearish divergence, and we have broken from going from higher lows and higher highs to now putting in lower highs and lower lows on 4-hour RSI. Let's see what else is going on out there. Let's go to the US dollar. Not much happening on the dollar. It's not even open. Let's check out gold. We're long of the gold miners. Gold, for the most part, over the past couple of trading days, has done nothing but really just put in a beautiful bull flag setup, of which we are breaking out. The problem for gold at current is that, let's pull back here so you get a better view, is that we have some stiff resistance above. But I think that if we manage to close out a 4-hour bar, it may not be this 4-hour bar, but tomorrow morning, tomorrow afternoon, whatever, if they manage to close it above this upper band of resistance, I think that in all probability, that if we continue to see weakness in the markets, you're going to see a lot of money go rotating into the precious metal names because it's going to be a risk-off environment. Therefore, you're going to see money go to safe haven plays. Let's check out silver. Silver, I looked at earlier. And again, this is before the news, and it was breaking out, at least on a 4-hour basis. It did break out. So we broke out here on the 14th, failed to hold it. We broke out yet again overnight last night, consolidated. Now we did a nice retest here. I like that. Now it appears as though silver is moving higher. We're long of silver. We're going to be looking to add more now as we begin to see money rotate into silver as it's breaking out of a very, very nice base. Bitcoin was getting crushed earlier. It's still down about 7.5% on this session. I don't know if Baruna's out there. Okay, Pat, you got it. I don't know if Baruna's out there, but he wanted me to go over Bitcoin as one of our other members, and you got to avoid it right now. It's probably going to rally off of this third standard deviation Bollinger Band. It may catch a bid due to it being another alternative to gold. I don't buy into that yet. The cryptos are an alternative to gold, but you may have millennials out there thinking that, and they may move some money into Bitcoin. So they may rally it off of this third standard deviation Bollinger Band. It's not a sound base for me to buy off of yet, but we'll keep an eye on it. We do have a position in Bitcoin, but I'm not looking to add more right now. I would rather look more towards the precious metal space. For Pat, let's go over nat gas. So Pat, this is what I was talking about in terms of resistance earlier on nat gas. They spiked it up higher into resistance here. We still have a one handle on spot. We have an inside bar, this new bar here. So I would look for a spot to close above 1.95, do a retest, and then we'll look to the long side of nat gas. But right now, as far as I'm concerned, we still have a downtrend going on here, and the path of least resistance has not changed. Here's our weekly chart, and again, here we have fairly significant resistance above on nat gas. Could the sell-off be over? Sure, for all I know. I'm not that smart. The markets will tell us. If they manage to close it above resistance, then we got our marching orders. It's time to look at nat gas to the long side. But right now, the market is still implying that we still have weakness and that we should be very, very cautious. Now, I will say this. RSI weekly basis is looking very attractive. We are breaking out here. So it looks as though we may have a bottom in for nat gas in the short term. Ideally, what you want is a pullback, a higher low, then a breakout. We don't have that yet. Back to the 4-hour charts. I want to take a look at treasuries, the 10-year. Hey, Norris. I like Nugget. I like it a lot. And I'll show you why in a moment, Norris. I'll go to that chart for you in a moment. Where was I going to go next? Oh, bonds. We want to take a look and see if we have money rotating into bonds, and we do. So that means that you have pressure on yields as money floats into the bond market, and I really like this breakout here. We're breaking out this candlestick. RSI, beautiful. Exactly what you want to see. Higher lows, higher highs. Perfect. As long as we close above this breakout point. We're not guaranteed that right now. We'll see in a few hours. All right, so let's take a look at Nugget. All right, so Nugget is very close to being in the apex of a wedge formation. We broke out above our tripwire here. Hey, Arthur. Palladium. I know it was breaking. We'll go to the chart in a moment, Arthur. I'll check it out for you. Did it not make new daily highs? I thought it was going to when I looked at it this morning. All right, so Nugget, obviously it's not open right now, but we have broken out above our tripwire here in yellow. That's like an early warning indicator when a stock is in a very tight consolidation. I like to lay out tripwires, and it just gives me an indication of, you know what, keep a closer eye on the position because we may see a breakout fairly soon. This consolidation is very tight. We let our covered call position expire worthless on Friday. We will look, assuming that gold spikes up early tomorrow morning or does break out. We're not guaranteed of that. If we do get a breakout on gold tomorrow, my assumption is that NUGT, the gold miners, GDX, whatever you like to trade, they should follow suit. And I don't want to sell near the money covered calls any longer. I want to wait until those shares get a little bit frothy, maybe intraday, 15-minute, 30-minute chart, and then sell covered calls on strength on out of the money options, and then just scalp the trade at the end of the day and not cap my upside potential on the trade. And that's been my biggest fear. We've been selling covered calls just out of the money for, I don't know, 10 weeks or so. And we've done very, very well with it. But now it's time to rein in the horns. And I've been saying that, but it's really time to watch these charts because I think these markets are finally, with the Apple cut, they're finally going to start waking up to the fact that this market it's on very, very thin ice. And I keep saying over and over again, when I go over these charts of the stock market, I keep saying it's not going to end well. And I feel bad for those that are new to the market. They've gotten all excited and they finally put their nickel down and they buy a stock and all of a sudden they get hammered. It's just not, it's terrible. And I've seen it happen. Bull market after bull market after bull market. The amateur money gets in the last few weeks of the trade and they get hammered. It's very sad. Let's go to Palladium. So Norris, I like NUGT. I like the way it's setting up. If they gap it up higher, will I chase it tomorrow? Probably not. But I'll wait for it to come back in a little bit and then add more shares on a pullback and ideally a retest of the breakout point, just like we normally would do. Where's Palladium? Here we go. It's not a double top. No, we have a breakout. I like the setup here. I think Palladium's going higher. It's a little bit frothy here, but I'm not going to be the least bit surprised to see a push higher on this breakout. You got to love it. Let's go to a weekly chart really quick. Yeah, look at this. You know, what's not to like here? Beautiful bull flag setup. RSI, perfect. Yes, it's frothy, but that doesn't mean it can't continue higher. I think it looks really, really good. You're welcome, Norris. And we'll close it out with going back to the NASDAQ 100. You know, a report came out today that Q4 2019 earnings were down if you backed out the Facebook, Amazon, Netflix, and Google earnings. And at current, on this chart here, we still have RSI at 79. Very, very extended on these names. We began to weaken up here yet again. Here we had a dead cat bounce. Looks like we're going to roll over a little bit further here on the NASDAQ 100. Thanks, Pat. I don't remember Patty is an outdoorsman who just texted me. Cool. All right. So yeah, it looks like we're going to come back under a little bit of pressure here. Again, folks, this is not a doom and gloom commentary. It's more of a cautionary tale. When I was on an interview with TrendSpider back in October, we had 3 back-to-back weeks of a down market, and the audience on that webinar, they were very, very pessimistic about the market. And I said, listen, this goes back to October of 19. I said, listen, this market's going higher. And I was asked, I was challenged, why is it going higher? I said, it's simple. It has nothing to do with the charts. It has everything to do with being a presidential election year. He is not going to lose this election, President Trump, without a big fight. So if anyone thinks that it's just going to be Apple earnings that takes down this market, I think that they'd be wrong to think that. I think that you're going to have the Federal Reserve is going to be in there pumping in liquidity. We know the chart, if you overlay Fed liquidity versus the S&P 500, they trade in lockstep on a chart. It's undeniable. So you need to expect Fed intervention. The only thing that I could see causing the Federal Reserve to get overwhelmed by the market is a follow-through. Meaning, if we get more companies, and I fully expect Amazon to come out and warn. Now that Apple has come out, I think that Amazon is going to come out and warn. Why? Where do a vast number of Amazon's products or the products of their subscribers, where are they produced? They're produced over in China. And even if they're not produced over in China, you have the rest of the emerging markets over in Asia now becoming infected. What is that going to do to the supply chain? And I've been saying that there will be a supply chain shock. Now it's beginning to come home and roost. So allow for, if you want to short this market, allow for a counter trend rally back. They will rally this market back. May not be Apple that comes back right away, but other names will. Look to short those names because eventually they are going to roll over. And I think that Amazon, which we shorted last week using the 1,600 put options, we booked a nice profit on that. We exited. And we'll be looking at it again, honestly, to the short side. If they do not take Amazon down, then we'll be looking to the short side and Amazon yet again, fully anticipating a downgrade of their forward-looking guidance because Apple did it. Now I think the market's going to have to price in the rest of any other company that has exposure to China. They're going to have to price it in. I can't see how they don't. And with that, folks, I'm going to say goodnight to everybody. Everybody have a profitable trading day. Please hit that like button. And members, I will catch you tomorrow. And I'll be live tomorrow morning, 5 a.m. Eastern Standard Time. Please hit that like button. Everybody have a great night. Be well.